Hello, it is the 30th of June 2012. Let's go through these charts fairly fast, and let's get started. Daily chart for gold, and quite frankly, it's got to get above this 18 average band. I want to talk a lot about this within the video because it's really what helps define the trend. Declining trend, it's not good. Sideways, it's neutral, and obviously we don't see an uptrend really for the most part. But anyway, you're trying to find this thing break free. This is the first time it got above the 18 average. It did make a higher low, which is what you're hoping for. Good, good, good. Break above it, not yet, and okay, just get so choppy here. Another possible breakout here, but didn't find the higher low. Now, in a situation as we just recently seen with this big candle, you establish a higher low, and now you're above this. So you're looking for the big break higher and the retracement lower. Well, you had it. You established extremely well at this Fibonacci line, and then you made this very volatile higher low, which is fine. You get back up here, but you notice it didn't find support right here where it's supposed to, and it goes below the band. This thing is extremely choppy, extremely messy, and very difficult to point for direction. Gold on the weekly chart. There's a descending triangle, just like silver, something like that. And like silver, as you'll see on the weekly time frame, a decent amount of time before it's going to come to its conclusionary phase. Therefore, the big support level right now is in this area, roughly at about 1525. The next big support level is pretty much around 1395 to 1400. An area of previous resistance. It's also a significant Fibonacci retracement on the longer term time frame. You can also consider this to be a sideways consolidation. So really, until it breaks down below the 1530 level or gets above 1800, it's nothing more than in a sideways consolidation. There was a trend line. A trend line did break. One of three things occur when you break trend lines. In an uptrend case, you either A, reverse the trend, go lower. That could happen. If it does, it has not happened yet. B, it is a possible failed breakdown. That could happen. It has not happened yet. For it's got to do something to get back to the line and then back, at least trade within the range again. That could happen, but is not happening. Or the third thing is it just goes neutral, and that's exactly what it is. It's a sideways consolidation between 1530 and 1800 for the most part. And when you're looking to buy dips and you want to know what a dip is when it's not making highs and it's a little decent away amount from its highs in a solid uptrend, and that would be the case right now with gold. And silver, let's take a look at silver. We'll do the quarterly time frame to start. The quarter has come to a conclusion. It lost 4 3/4 for the quarter, or a loss of almost 15%. We can see this little bit of this triangle in here, but for the most part, what you're seeing is it's coming back within this band. It's a correctionary phase, as it occurred in here, and it happens within all of these charts. You're going to see an uptrend to that. That's the first place that it has to go towards, and well, that's where it is right now. Let's move this on to the monthly chart, as the losses for the month was only 23 cents, or a little under 1%. But we can see how constant this 26 level is, with 1, 2, 3, 4 different tests of this level. And of course, the downtrend line. The next significant level is this level here, which works out to be 1910. And this is a 23.6% retracement, so this would be 38.2. So how well this holds if it comes? Most likely, they usually do. Not always. A lot of times not holding could be failed move, meaning it just has a quick move down to here, and then it at least settles in back within this range later on. That's what you that's just a fast break that never holds. That's not that uncommon. And of course, if that level doesn't hold, I'll be saying that if it does go here, I'll always be saying the next levels on both upside and downside, because that's the easiest way of doing it. And the next level below that would be 1056. I just do not see that happening unless the banks just want to do it because they can do it. and that would just be the end, I think, if that were to be the case. But you never know. I doubt it though. I think the odds that 20 holds as a big support level is extremely high, if of course it even goes there, because there's no guarantee that's to be the case. On the weekly time frame, there's the resistance line, and you can see within this here that there's a long ways away before this thing is going to come to a conclusion. Long ways. And until that does, you can say, well, it's in the neutral phase, but the whole period about the lows, what's important is, well, let's look at the 18 average. Okay, so you're in the stable mode here, you get above it. You come back, find support, you break resistance. And this was a good time to buy, but it didn't work out because it didn't find a higher low anywhere in here. But that was the pattern that you're looking for. So now it gets above it again and breaks out, but doesn't find and maintain support at this level, which is why the 30 level was so huge for it to hold. There are 30s like pretty much in here. This would have kept it from not going below that 18 band, but no, that's not the case. So now it's back to square one again and making this band flatten out, get above it, rise above it, and stay above it. That's back to square one, basically. But as far as the highs and lows are concerned, point A, point B, point C, point D, point E, point F, point G, whatever. So we've had 3 straight hits so far at 26, and really 2 hits in the same area here around 37. So very much neutral until it breaks that range. Let's move this on to the daily chart now, and well, you look at this failed breakout here. Yeah, well, that happens. Failed moves create fast moves. 30 was a big level, by the way. It didn't hold too well here. It found one big bounce, but it didn't do much here. 3 days consolidating 30, then boom, it broke below. And then resistance as it pierced below. It hasn't been above 30 since this day in here now. And even then, it just started the day barely above 30. It's been a long time since we've seen over $30 silver. Really precious metal, isn't it? Anyway, with that being said, you had this failed breakout because it got above this 18-period average. And broke above it pretty nicely. It didn't find a higher low, though. It did go within this band, and it didn't stay there. It didn't break above it, just staying within it, and then boom, see this day here, it closed below the 18 average after having a pierce below. That's not a strong sign. And then boom. And now we have this rally. Well, maybe it might be the bottom, but there's no signs yet. We see so much of this pattern where you have this big green candle followed by this red one. That's getting extremely common, even for that matter here. Had a nice break above and then boom. But whatever. Let's go to the 5-hour chart. And this thing has an interesting pattern, to say the least. This level here is pretty big right now, which is about 27.52. It takes the highs of 29.91, which is at pierce below 30, resistance at former support, and then this most previous low at 26.13. See, this is a negative, or interesting last 2 periods. Second to last period here, the green candle one. It went up to this high, but came back down, found support at this significant level that was once resistance. Then the next period, it comes back up, finds the lower high, and then again, a second support level at the same level that was resistance. I can't get anything off this for bullish or bearish. Yes, it's a bearish looking setup, but it's also bullish to find support at this level. And I know breaking higher, I'd be really breaking above here. I'd be thinking it's almost a no-brainer. It's going at least to this level here. But anyway, that's that. Let's finally take a look at this at the 13-minute time frame. Now, why the 13-minute time frame? I need 100 periods, because that's the way I like to look at this for the most part. And this gives me pretty much the whole day. So again, look at this failed breakout, and then it comes back into the pattern. And in fact, it ends the day in such a big mess. There's that, and then there's that. That's a symmetrical triangle. And of course, after trying to break outside of this 18 average in here, what's it do? An immediate red candle stays within the range, and now it's had 3 consecutive closes, 4 really, below the 18 average, but really barely below. And the volatility is just so micro right now, because you can look at these things are just sliding in so tight. as it was in here. That's because not much was going on. And then the size movements were huge. In fact, you can see here that it went from like 27 all the way up to like 28. That's like a 4% move, and about like 9 periods or so. So that would work out to a couple of hours. And you make this high, you make this low. What are you going to take out next? Oh, I don't know. Well, we made this high, we've made this low. So that's the next one on the horizon. Maybe we'll come up and make a gap up here, and then sell off down to here, and then just give it more confusion for the start of the day. I don't know. But I'm going to end this video, and thank you for tuning in. And finally, if the charts are available in the more information box, there's another chart on here that I'm not going to cover, and that is the 33-day palladium chart. Very violent moves, to say the least. At least from point A to point B, and then from point B to point C, and then again from point C to point D, and then D to E. Thank you for watching, and have yourself a great day. Bye-bye.